The world of finance is changing. On April 11, 2025, China made a bold move. It cut off access to SWIFT. This sent shockwaves through the global economy. China also launched its Digital Yuan globally. This new currency is worth $1.2 trillion. China's actions are a direct response to growing tensions with the United States. These tensions have been building for years. They are about trade, technology, and global influence. This is a story about power and money. It is a story about the future of the global economy, and it is a story that is still being written. As the world watches, the stakes have never been higher. The global financial landscape is being reshaped, and the United States is at a crossroads. The future of finance is digital, and the race is on. Who will lead in this new era? Only time will tell. To understand China's move, we need to understand SWIFT. SWIFT, or the Society for Worldwide Interbank Financial Telecommunication, is a global messaging network that financial institutions use to securely transmit information and instructions through a standardized system of codes. SWIFT stands for the Society for Worldwide Interbank Financial Telecommunication. It was founded in 1973 with the aim of replacing the telex technology that was then widely used in the financial industry. Over the years, SWIFT has grown to become the backbone of global finance, facilitating the smooth and secure transfer of trillions of dollars every day. It is based in Belgium. SWIFT is the backbone of global finance. The organization operates as a cooperative society under Belgian law and is owned by its member financial institutions. Its headquarters are located in La Hulpe, a suburb of Brussels, and it has offices around the world to support its global operations. Think of SWIFT as the Internet of Money. It connects over 11,000 financial institutions in over 200 countries. This vast network allows banks and other financial entities to communicate securely and efficiently, ensuring that transactions are processed quickly and accurately. The system uses a standardized set of codes to identify banks and financial institutions, making it easier to send and receive information. Every day, trillions of dollars flow through SWIFT. Banks use SWIFT to send and receive information about financial transactions. This includes everything from simple payment instructions to complex securities transactions. The system is designed to be highly secure, with multiple layers of encryption and authentication to protect the integrity of the data being transmitted. This includes payments, transfers, and currency exchanges. Without SWIFT, global trade would grind to a halt. The system is so integral to the functioning of the global financial system that any disruption to its operations can have far-reaching consequences. For example, when certain countries have been cut off from SWIFT as part of international sanctions, it has had a significant impact on their economies. SWIFT ensures that transactions are secure and reliable. It is a vital part of the global financial system. The organization continually invests in new technologies and security measures to stay ahead of potential threats. This includes everything from advanced encryption techniques to sophisticated monitoring systems that can detect and respond to suspicious activity in real time. But what happens if a major player like China decides to cut off SWIFT access? The implications are enormous. It could disrupt global trade and financial stability. China is one of the world's largest economies, and its financial system is deeply integrated with the global economy. If China were to be cut off from SWIFT, it would have a significant impact on international trade and finance. The implications are enormous. It could disrupt global trade and financial stability. Such a move could lead to a fragmentation of the global financial system, with different regions developing their own networks and systems for processing transactions. This could make it more difficult and expensive to conduct international trade, as businesses would need to navigate multiple systems and standards. China's introduction of the Digital Yuan is a strategic move to reduce reliance on SWIFT. The Digital Yuan, also known as the ECNY, is a central bank digital currency, CBDC, that is being developed by the People's Bank of China. It is designed to be a digital version of the physical yuan, and it can be used for a wide range of transactions, from everyday purchases to international trade. As the digital yuan goes global, it challenges the dominance of the US dollar in international trade. The US dollar has long been the world's primary reserve currency, and it is used in the majority of international transactions. However, the rise of digital currencies like the digital yuan could change this dynamic, as they offer a new way to conduct transactions that is not tied to any particular country or currency. This shift could lead to a new era in global finance, where digital currencies play a central role. Digital currencies offer several advantages over traditional currencies, including faster transaction times, lower costs, and increased security. They also have the potential to increase financial inclusion by providing access to financial services for people who are currently unbanked or underbanked. The world is watching closely as China makes its move, and the future of global transactions hangs in the balance. The introduction of the digital yuan is just one part of a broader trend towards the digitization of finance, and it will be interesting to see how other countries and financial institutions respond. Will they develop their own digital currencies, or will they continue to rely on traditional systems like SWIFT? Only time will tell. China's decision to cut off SWIFT access is a major escalation in the financial conflict with the United States. This unprecedented move has sent ripples through the global financial markets, causing a wave of uncertainty and speculation. The Society for Worldwide Interbank Financial Telecommunication, or SWIFT, is the backbone of international financial transactions, facilitating secure and standardized communication between financial institutions across the globe. By severing ties with this system, China is making a bold statement about its financial independence and its willingness to challenge the status quo. It is a sign of China's growing confidence. Over the past few decades, China has transformed itself into an economic powerhouse, with rapid growth and development that has positioned it as a formidable player on the global stage. The bustling stock exchanges and the impressive urban landscapes of cities like Beijing are a testament to this growth. Cutting off SWIFT is a clear indication that China believes it has the economic strength and technological infrastructure to support its own financial system. By cutting off SWIFT, China is saying that it is no longer willing to play by the rules of the US-led financial system. This move is not just about financial transactions, it is a strategic maneuver that reflects broader geopolitical tensions. The US has long dominated the global financial system, and SWIFT has been a critical tool in maintaining that dominance. By creating its own system, China is challenging this hegemony and asserting its own vision for the future of global finance. It is creating its own system. The development of the digital yuan and the investment in cutting-edge financial technology are key components of this strategy. China's tech infrastructure is rapidly advancing, and the digital yuan is poised to become a significant player in the world of digital currencies. This new system is designed to be more efficient, secure, and independent from the traditional financial networks dominated by the West. This move has created uncertainty for global financial institutions. Businesses around the world are now grappling with the potential implications of this shift. The graphs showing market instability and the concerned faces of business executives reflect the anxiety that this decision has generated. Companies that rely on international transactions are particularly vulnerable, as the disruption of SWIFT could lead to delays, increased costs, and a host of other challenges. Many are worried about the impact on their business. The uncertainty surrounding the future of international financial transactions is causing stress among traders and executives alike. International banks, which rely heavily on the SWIFT network for their operations, are particularly concerned. The potential for disruption is significant, and the long-term effects are still unknown. They are also concerned about the potential for disruption in the global financial system. The scenes of economic instability and disrupted transactions highlight the broader implications of China's decision. A major disruption in the global financial system could lead to a cascade of economic challenges, affecting everything from trade to investment to everyday financial transactions. China's decision is a major gamble. The imagery of the Chinese flag opposite the US flag on a chessboard underscores the high-stakes nature of this move. It is a strategic risk that could either pay off by establishing China as a leader in the new financial order or backfire by causing significant economic turmoil. The world is watching closely to see how this gamble will play out, but it is a gamble that China seems willing to take. The confidence of Chinese business leaders and the strategic economic planning that has characterized China's rise suggest that this is a calculated risk. China has a history of making bold moves to secure its place on the global stage, and this decision is in line with that approach. The SWIFT system, which stands for the Society for Worldwide Interbank Financial Telecommunication, is a critical component of global finance. It is the backbone of international financial transactions, enabling secure and standardized communication between financial institutions worldwide. The importance of SWIFT cannot be overstated. It is the glue that holds the global financial system together. It facilitates secure and standardized communication between financial institutions worldwide. The SWIFT network is used by over 11,000 financial institutions in more than 200 countries, processing millions of messages each day. This level of connectivity and reliability is crucial for the smooth functioning of the global financial system. Cutting off access to SWIFT can severely disrupt international trade and finance. The interconnected nature of the global economy means that any disruption in the financial system can have far-reaching consequences. Trade routes, shipping, and financial hubs around the world could all be affected, leading to delays, increased costs, and economic instability. The move has sent shockwaves through the global financial community. Financial analysts are now scrambling to understand the full implications of China's decision. Tense negotiations and discussions are taking place as businesses and governments try to navigate this new landscape. The reactions in global markets have been swift and dramatic, reflecting the uncertainty and concern that this move has generated. Experts are now debating the long-term implications of this bold step by China. The cutoff from SWIFT is not just a short-term disruption. It has the potential to reshape the global financial system in profound ways. Economic forecasts are being revised, and financial experts are analyzing data to predict what the future might hold. The debates are intense, with opinions divided on whether this move will ultimately benefit or harm China's economy. As the world watches closely, the future of global finance hangs in the balance. The strategic meetings and financial planning sessions taking place around the world are a testament to the high stakes involved. The decisions made in the coming months will have far-reaching implications for the global economy. As China charts its own course, the rest of the world must adapt to this new reality, and the future of global finance remains uncertain. China's launch of its Digital Yuan is another sign of its ambition to reshape the global financial order. The Digital Yuan is a central bank digital currency, or CBDC. It is different from cryptocurrencies like Bitcoin. The Digital Yuan is issued and backed by the People's Bank of China. This gives it a level of stability and credibility that cryptocurrencies lack. China has been developing its digital currency for several years. It has conducted extensive trials and pilots. The Digital Yuan is now ready for prime time. The Digital Yuan is poised to play a significant role in global trade and finance. Businesses and financial systems worldwide are beginning to adopt and integrate the Digital Yuan. The Digital Yuan leverages advanced blockchain technology to ensure secure transactions. China's economic growth is expected to be further boosted by the widespread adoption of the Digital Yuan. From everyday transactions to large-scale international trade, the Digital Yuan is set to revolutionize how money is used. As the Digital Yuan leads the way, the global financial landscape is on the brink of a major transformation. The Digital Yuan offers several advantages over traditional currencies. It is faster, cheaper, and more efficient to use. It also has the potential to increase financial inclusion. China is promoting the Digital Yuan as a global alternative to the US dollar. It is encouraging other countries to adopt it for bilateral trade. Several countries, including Russia, Iran, and several African nations, have already started using the Digital Yuan. They see it as a way to reduce their reliance on the US dollar. New financial players are entering the market, bringing optimism to global trade. These developments are reshaping the global economic landscape. Analysts believe that the rise of digital currencies could lead to more balanced global trade. International cooperation is key to this transformation. As more countries adopt digital currencies, we could see significant economic growth, especially in developing nations. The financial markets are already reacting to these changes, indicating a shift towards a more diversified and resilient global economy. Section 6. The dollar's grip loosens. The rise of the Digital Yuan poses a direct challenge to the US dollar's dominance as the world's reserve currency. The dollar has been the world's reserve currency for decades. This means that most international transactions are conducted in dollars. It also means that central banks hold most of their foreign exchange reserves in dollars. The dollar's dominance has given the United States enormous economic and geopolitical power. However, that dominance is now under threat. The emergence of the digital yuan and other digital currencies is reshaping the global financial landscape. As countries explore alternatives to the dollar, the future of global trade and finance hangs in the balance. Section 7. Global Implications, a Shift in Power. The shift away from the US dollar to the digital yuan has the potential to reshape the global balance of power. It could lead to a more multipolar world. A weaker dollar would make it more expensive for the United States to import goods and services. It could also lead to higher interest rates. The rise of the digital yuan also has implications for global financial stability. It could create a more fragmented financial system. As the digital yuan gains traction, the global financial landscape is set for a dramatic transformation. The implications of this shift are profound, affecting everything from international trade to geopolitical alliances. The world is watching closely as the digital yuan continues to rise, signaling a new era in global finance. Section 8. The Future of Finance. The future of the US dollar versus the digital yuan is uncertain. As we move further into the 21st century, the global financial landscape is undergoing a transformation unlike any we have seen before. The US dollar has long been the cornerstone of international trade and finance, but the emergence of the digital yuan is challenging this status quo. The digital yuan, backed by the Chinese government, represents a new era of digital currency that could redefine how we conduct transactions on a global scale. However, one thing is clear. We are witnessing a historic shift in the global financial system. This shift is driven by technological advancements, changing economic power dynamics, and evolving consumer preferences. Financial markets around the world are becoming increasingly interconnected, and the rise of digital currencies is accelerating this trend. The traditional financial system, with its reliance on physical currency and centralized institutions, is being challenged by decentralized digital currencies and blockchain technology. The digital yuan is a powerful new player on the global stage. It is not just a digital version of the Chinese yuan, it is a state-sponsored digital currency designed to enhance the efficiency and security of financial transactions. The Chinese government has been actively promoting the digital yuan both domestically and internationally, positioning it as a viable alternative to the US dollar for international trade and investment. This strategic move is part of China's broader efforts to increase its influence in the global financial system. It has the potential to challenge the US dollar's dominance. The US dollar has been the world's primary reserve currency for decades, but the rise of the digital yuan could disrupt this long-standing dominance. If the digital yuan gains widespread acceptance, it could reduce the world's reliance on the US dollar and shift the balance of economic power towards China. This financial rivalry between the US and China is not just about currency. It is about economic influence, geopolitical power, and the future of the global financial system. The outcome of this competition will have profound implications for the global economy and the balance of power in the 21st century. The stakes are high, and the decisions made by policymakers, financial institutions, and consumers will shape the future of the global financial system. Economic instability, trade tensions, and technological disruptions are all factors that will influence the outcome of this competition. As the world navigates this uncertain landscape, it is crucial to understand the potential consequences of a shift in the global financial order. As digital currencies become more integrated into the global economy, traditional financial systems will need to adapt. The integration of digital currencies into the global financial system is not just a technological challenge, it is also a regulatory and policy challenge. Governments and financial institutions will need to develop new frameworks to manage the risks and opportunities associated with digital currencies. This will require collaboration and innovation across the public and private sectors to ensure that the benefits of digital currencies are realized while minimizing potential risks. The rise of the digital yuan could lead to new opportunities and challenges for international trade. On one hand, digital currencies can facilitate faster, cheaper, and more secure cross-border transactions, reducing the friction and costs associated with traditional payment systems. On the other hand, the adoption of digital currencies could create new challenges related to regulatory compliance, cybersecurity, and financial stability. Businesses and governments will need to navigate these complexities to harness the potential of digital currencies for international trade. Blockchain technology and digital currencies are revolutionizing the way we think about money and transactions. Blockchain, the underlying technology behind many digital currencies, offers a decentralized and transparent way to record and verify transactions. This has the potential to increase trust and reduce fraud in the financial system. Digital currencies, powered by blockchain technology, can enable new business models and financial services that were not possible with traditional currencies. This revolution in financial technology is opening up new possibilities for innovation and economic growth. The integration of these technologies will shape the future of finance in ways we are only beginning to understand. As digital currencies and blockchain technology become more prevalent, they will transform the financial landscape in ways that are difficult to predict. This transformation will create new opportunities for businesses, consumers, and governments, but it will also pose new challenges. The future of finance will be defined by how we navigate these opportunities and challenges, and how we leverage technology to create a more inclusive, efficient, and resilient financial system. As the digital yuan gains traction, it will be crucial to monitor its impact on global financial stability. The adoption of the digital yuan and other digital currencies will have far-reaching implications for financial stability, monetary policy, and economic governance. Central banks and financial regulators will need to closely monitor these developments and adapt their policies to ensure that the benefits of digital currencies are realized without compromising financial stability. This will require ongoing research, dialogue, and collaboration among stakeholders in the global financial system. Experts predict that the next decade will be pivotal in determining the balance of power in the global financial system. The decisions made in the coming years will shape the future of finance for generations to come. Policymakers, financial institutions, and consumers will all play a role in this transformation. By staying informed and engaged, we can help shape a future where digital currencies and traditional financial systems coexist and complement each other, creating a more dynamic and resilient global economy. The future of finance is digital, and the world must prepare for this inevitable transformation. As we embrace the digital revolution in finance, we must also address the challenges and risks that come with it. By fostering innovation, collaboration, and responsible governance, we can build a financial system that is more inclusive, efficient, and resilient. The journey ahead will be complex and uncertain, but it is also full of potential. The future of finance is not just about technology, it is about creating a better, more equitable world for all. Section 9. A call to action. What do you think about the rise of the digital yuan? How will it affect the US dollar and the global economy? Share your thoughts in the comments below.